Hey there! This video is all about buying a house in Denmark. If you watched part 1, great! Now, we're diving into how to figure out the mortgage and bank loan and the different types of them. But before we get started, don't forget to hit the like button and share this video with your friends. Okay, let's jump in. In the last part, we showed you how to find a house on a website. Now, we're focusing on the loan part. In Denmark, you need at least 5% of the house price to buy a place. The mortgage loan covers up to 80% of the house price. And if you need more money, you can take a bank loan to cover the remaining 15%. So in total, the bank can give you up to 95% of the house price, but you must be able to make monthly mortgage payments. Here's a little trick. Usually, you can borrow around 3 to 4 times your household's yearly income before tax. For example, if you and your partner each make 500,000 kroner a year, you might be able to get a house loan of around 4 million kroner. On this website, you can calculate loans from different banks. The interest rates won't be very different because the money comes from a mortgage credit institution like Real Credit Denmark. But there might be a slight difference in the interest rate for the bank loan, and the amount you can borrow may vary. You can talk to different banks to see what works best for you. Now, meet Sarah. She's a customer at Danske Bank and wants to buy a house with her boyfriend. They saved up 800,000 kroner, and the bank said they could get a loan of up to 4 million kroner. If you're not sure how much loan you can get, then click here and book a meeting with a bank advisor. In this meeting, which takes about an hour, you'll talk about your income, pension, and savings, and the bank will help figure out how much loan you can get and what type might suit you best. All right. Let's figure out how much money Sarah and her boyfriend need to borrow for their house. Look at the price of the house and the part where you have to pay some money yourself, your own payment or down payment. This is the price they're asking, but you can try to negotiate for a lower price when you visit the house. But for now, let's stick with this price. In this part, the down payment is 5% of the house price that you need to pay. You can change this number to the amount you want to pay. However, let's see here if you pay only 5% of that, what happens? It says here that if you get a loan, you have to pay around 26,000 kroner every month before tax. That's a lot, almost more than the average salary in Denmark. But there are some options that can change this amount. Look at this section. You're getting 2 types of loans, a mortgage loan and a bank loan. After taxes, you have to pay back 21,500 kroner every month. The real credit loan is a Danish word for a mortgage loan, and you pay 17,650 kroner per month for that. It takes 30 years to pay it all back, but you can change this period. There's also something called an interest-only loan. It means you pay less each month for a certain period, but afterwards, your payments will go up. Talk to your bank to decide if this is good for you. Here, you see the amount for the bank loan, and it takes about 10 years to pay it off. Most people choose 10 to 20 years for this. Remember, the interest rate on the bank loan is higher than that on the mortgage loan. So most people try to get rid of it as soon as they can. Let's check the details about the loans here. First, look at the mortgage loan. This is the amount the bank gives you, which is almost 80% of the house price. It's called the principal or the original value, and it includes the startup costs to the bank. This is the money you have to pay every month for the mortgage loan before taxes. You have to do this for 30 years. Debt interest or effective interest is the fixed yearly interest with compound interest Right now, it's about 4% decided by Real Credit Denmark. It used to be 1% in 2020, but now it's a bit higher. We hope it goes down in the future, so you pay less interest to the bank. An important thing here is the kurs, which means the rate or exchange rate. If the kurs is below 100, it means you lose money when you borrow. For example, if the kurs is 95, you get only 95 kroner when you borrow 100 kroner. So for every 1 million kroner, the bank pays only 950,000 kroner. But if the kurs is 99, you get 990,000 kroner. It's better to borrow when the exchange rate is close to 100. When the kurs is high, it will cost less in the future if you switch your bank loan to another type. Now, look at AOP, the total interest rate with costs yearly. It includes all costs of the loan, like interest and creation fees. This is the total cost for this mortgage loan in 30 years. So when you get this loan, the final amount you pay back will be around 6 million krone. In the bank loan section, you can see the loan amount, monthly payment, running time, debt interest, which is higher than the mortgage interest rate, AOP, all costs for the loan, and the total amount you have to pay back in 10 years. Summing up, you get a loan of about 3,800,000 krone, and you pay back about 7 million to the bank. I know, it's quite expensive. There might be other types of loans cheaper than this one. We've been talking about something called an obligation loan, which means a fixed loan in English. Fixed loan means the interest rate stays the same for the whole loan time. But guess what? There's something else called a flexible loan, with different types, like Flex Loan F1, where the interest is fixed for 1 year and then changes. Or this one, which is more popular, Flex Loan F5, where it changes every 5 years. Now, the interest rate might be low with a flexible loan, but there are two things about it. First, the interest rate changes every 5 years. The new rate will be adjusted depending on the daily value at that time. On the second point, if you want to switch to a fixed loan after 5 years, it might cost you more because the kurs value is low here. But hey, if you're good at predicting stuff in the market and know the interest rate won't go up after 5 years, then the flex loan could be a good choice. We suggest talking to your bank. They'll give you a few options so you know which loan type is good for you. Let's do another calculation here with higher down payment. If you pay a bit more than 20% of the house price upfront, you won't need the bank loan anymore. So if the house is 4 million krone, then you pay 800,000 krone, which is the 20%, plus 70,000 krone as costs for starting the loan. Check here, you'll only have the real credit loan, and your monthly payment will be less, around 14,300 krone. Now, before finishing off this video, let's see the total cost of having this house. You'll pay about 4,000 krone for owning the place and 3,000 krone for utilities like electricity and gas. So in total, you pay 7,000 krone for owning and using the house. And remember that loan we talked about earlier? If your upfront payment is 200,000 krone, your monthly payment is around 21,500 krone. Adding it all up, you'll be paying around 28,500 krone every month. But this can be less if you pay more upfront as down payment or choose a different type of loan. So which option is good for you? It depends on your money situation. Talk to the bank people, and they'll help you pick the right one. Hope you found this video useful. Let us know if you liked it and share it with your friends. Subscribe to our channel for more videos about buying houses, where we'll talk about important documents and useful websites. See you in the next video. Thanks for watching.